Christian, as we head into the final stretch of 2025, what's your outlook for the markets?
My outlook for the markets for the rest of 2025 is we'll get through this consolidation phase. We're in it right now. I think investors are grappling with a few things. So first, will we have a rate cut? I think we will. Will all this AI spend slow down? I think it'll keep going. And we had a bit of a risk-off trade in Bitcoin. So once we get through those issues, I think we'll see the rest of December pretty smooth as investors try to book gains after a few really great years on the S&P.
And over at AssetMark, you work with probably more than 10,000 advisors. What are they saying about the market right now? What's their sentiment?
They're feeling pretty good about their portfolios because if you think about all of the headlines that all investors have had to grapple with, hard landing, soft landing, tariffs, their portfolios have remained really resilient. And that difference between what they're seeing on Main Street, what they're hearing in the media, and what they see on their bank statements, I think has kept them quite optimistic for 2026.
And what are the advisors that you work with saying about AI? Do they think it's a bubble? Maybe not a bubble? Maybe it's in the fifth inning, sixth inning? Where are they?
I'm not sure exactly what inning we're in, but I do think that we're not in an AI bubble because what we're seeing is that AI stocks, a lot of the hyperscalers, big tech, if you will, have actually gotten cheaper as earnings growth have outpaced price growth this year. And that tends to not happen when you're in a bubble.
And you mentioned the Fed a little bit earlier. What are your thoughts on the Fed in terms of where are they going to be in 2026? How much easing, if you expect easing, are they going to be doing?
I do expect easing in 2026. We'll definitely have a new Fed chairman as well. We'll have to see who that is. But not to be overly simplistic about this, but what I do think is that if the Fed does not raise interest rates, and I don't think they will, and we get some earnings growth in the S&P 500, we should have a pretty good year in equities. And I like to tell clients that we've been driving the fast lane for the last couple of years. We're going to move over to the middle lane. Maybe we'll get a pothole or two, but it'll still be pretty good pace.
And then finally, another big story in 2025, aside from AI, has been the move into private market assets. And AssetMark also has a lot of dealings with some of the top private market asset players. What's your outlook for this in 2026? Are more assets going to be heading into these sometimes illiquid vehicles?
I really think so, because in my mind, there are really two things happening here. First, risk is rising in public markets, whether you're talking about equity markets and market concentration or massive debt levels at the federal level for the fixed income market. Risk seems to be rising in the public markets. In private markets, I think opportunity is rising. When I think about the number of new private companies that get started every single year compared to shrinking public equity market, we see a lot of opportunities rising in private markets.
All right, well, thanks for coming on and talking about it.
Great, thanks for having me.